This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Natural Resources Investment Symposium, held July 7 through 11 in Boca Raton, Florida, or via live stream in the comfort and convenience of your own home. However you choose to attend, there's a couple things that you need to know. First of all, we'll give you between 50 and 55 hours of intensive programming over 4 days, more than you can possibly absorb. To that end, recordings of the conference will be available for a year after the conference, and special discussion groups will be held at the Rule Classroom where you can compare notes with other attendees about every topic discussed at the conference. Further to that end, we interview before the conference every single exhibitor and most of the speakers so that you can familiarize yourself with topics at the conference before the conference occurs, reaching out to the companies to learn more and allocating your time and your resources at the conference more efficiently. Another thing you need to know. At our conference, unlike any other investment conference on the planet, every public company exhibitor has been vetted. We have refused more sponsors than we have admitted. To be admitted, among other things, the conference sponsors must own shares of the exhibiting companies in their own accounts. There is no guarantee, sadly, that because I own stock in a company that the company goes up, but your guarantee is that I know the company well enough that I've invested my own time and treasure in it. So let's get started. Today I have the good fortune to interview a friend of very long standing, Dave Cole of EMX Royalty. Note, first of all, that I own shares in EMX. In fact, I've owned shares in EMX since before Dave was employed at EMX, which is a very long time. Dave, thank you for a couple of decades of toil on behalf of shareholders, especially me. And thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium series.
Our pleasure.
Dave, tell me something about your background. I've known you for a very long time, but our listeners don't. Where did you start? What did you do? Why should they care about your answers to the nosy questions that follow?
I recognized while I was working at Newmont Mining Corporation, the first half of my career for 18 years, that the value of mineral rights is going to augment over time. And through observation of people like Pierre Lassonde and some private prospect generators, Lyle Campbell in Nevada, when I was a young geologist, I figured out that the best way to be exposed to mineral rights are royalties. Royalties are phenomenal financial instruments. And so I left EMX I left Newmont Mining Corporation with encouragement from you. Thank you. 22 years ago to be a co-founder of this company. And we've been building a mineral property position, strategic investment and royalty portfolio for 22 years.
We'll go back to EMX, but I want to do a little bit more about Dave Cole. You started at EMX basically as a grunt, a real toiling geologist, but you worked your way up through Newmont to be country manager, as I remember, in a couple of countries. So you have a fairly strong exploration background with a major mining company before you left to go on your own. Is that not correct?
I like to say that one of the best days of my career was going to work for Newmont, and the other great day was when I left. And in between there was 18 and a half years of phenomenal study, and had the opportunity to work in many countries around the world, including Indonesia for 4.5 years and throughout Southeast Asia, China, Turkey, which was my last job as exploration manager of Turkey for Newmont. And I had the chance to observe the counterparties to Newmont's operations and learn from them, including the ones I just mentioned, Lyle Campbell and Pierre Lassonde and Franco-Nevada as being great examples, but also see the positives and negatives with respect to how a major mining company operates and develop mineral property assets and finds new mineral deposits to be able to fuel that growth. It was a phenomenal experience.
Now let's talk about EMX. Tell us in a very broad sense what EMX does for a living. What's the value proposition? How do you add value for companies, and how do you add value in particular for your shareholders?
Our main goal is to enhance value for shareholders through exposure to prospective mineral rights. And we believe the best way to do that is through the growth of mineral royalties. And royalties are phenomenal financial instruments with immense embedded optionality, commodity price optionality, which over the course of my lifetime has been phenomenal, more than I would have expected. When I was 10 years old, the price of gold was $32. Now it's $3,200. That's a compounded annual growth rate of close to 9%. It's rather astonishing. Copper's right behind it. And these are great metals to be exposed to. the world continues to consume more metal over time, which is a built-in growth mechanism. And the best way to do that is through acquiring prospective mineral rights. And we do this a couple of different ways, as you're aware. We do it through the prospect generation business model, where we actually are the underlying mineral rights holders. We coalesce the data, illustrate prospectiveness, sell those assets on to folks like Newmont and other major mining companies, as well as startup junior explorers, in exchange for cash, shares, in-ground work commitments, and always a royalty at the end of the day. So we've been building that royalty portfolio organically at very low cost to the shareholders for 22 years. And then we've augmented that portfolio by also buying royalties, typically higher up in the pyramid, to gain scale to the business. And all along, and I know you're particularly proud of the fact that throughout that 22-year history, we've made side bets, strategic investments in different companies where our geological and business acumen told us that this was something that we cannot not take advantage of. And our strategic investing history has netted out over $55 million over 22 years in profits. And those profits we've just poured right back into the business, buying more royalties and growing more royalties through royalty generation.
It's important for shareholders to note that yours is partly a merchant banking operation. The truth is the $55 million in profits that you've generated resulted in investments that you didn't have to raise by way of equity and limited dilution to a substantial extent to shareholders. And I'd like our listeners to focus on that. I'd like our listeners, too, to listen to this interview in conjunction with the royalty and streaming session at the Rural Classroom, and also the prospect generation session at the Rural Classroom. Some may recall the participation of Dr. Steve Enders, who has been important in EMX royalty in that session. Dave, talk to us about some of the key assets within EMX. I realize that process is the most important part, but properties are important too. Tell me about some of the assets that comprise the current value and are the basis on which you build the company.
So I'll start right in on the Timok royalty and royalties. We own multiple royalties within the Timok magmatic complex. And you're keenly aware of the history there. EMX came into, and we were called Southern European Exploration back then as a private company. And we came into Serbia to help the Serbian government rewrite their mining law, rewrite their concession law. We were granted exploration licenses in that country, the first foreign company to be able to accomplish that in over 40 years, and opened the door for foreign investment in Serbia. And within Serbia, there's an area called the Timok Magmatic Complex, which is Europe's largest historic copper and gold producing region. Part and parcel to our business model, we sold those assets and kept royalties. Then other companies came along within our royalty footprint and made some fantastic discoveries. To augment the royalties we grew organically, we also bought royalties. So now we have a series of royalties. We've acquired additional claims since then. So we've got a nice property position throughout this emerging belt. And this has turned into one of the most exciting areas of copper and gold discovery on the planet today, with multiple deposits being advanced, both on and off of our royalty footprints within that district. It's truly phenomenal. And so right now we have a 0.3625% royalty on 4 deposits that are being advanced, 2 of which are in production, and the cumulative reserve and resource on that deposit and within our royalty footprint continues to augment over time. And this is a company-making asset. In addition to the royalties, we have a close proximity to that and along that trend. And that royalty, which cumulatively, I have 200,000 Canadian dollars invested in the Timok royalty package. It's already paid over 13 million USD. And the in-ground, in situ value, if you look at the global resource and reserve at today's metal price, with no discount, so what we call an NPV zero, is approaching $1 billion, Rick. This is truly a phenomenal asset. And that speaks volume to this whole concept of optionality within a royalty ownership. So think great things can happen. The price of gold goes up, the price of copper goes up, and people explore more and they find more. And this just augments over time. And it can go from an early stage prospect to a major mining district that can have close to a century mine life. The current mine life that Zijin, the counterparty, gives on just the lower zone, one of the zones within our footprint, is 66-year mine life. And this truly phenomenal asset. It speaks volumes to the whole concept of how you win in the royalty business. And that's the most important asset within the portfolio. And it's interesting because that would not have been the most important asset just a few years ago. And I've heard David Harkwell say this about his portfolio at Franco, Nevada. Said some of our most important royalties I didn't know the name of. And that speaks to this whole concept that you own these royalties and they're all lottery tickets. I know you like that term. And people make discoveries on those, and we're in perpetuity at no cost to the royalty holder with respect to all the good things that can happen on those. So from there, I'll move to Caserones, the Timok's copper gold. We love those two commodities. They're great diversifiers to each other. The Caserones royalty operated by Lundin Mining Corporation, another fantastic mining company in Chile. And we have a huge royalty footprint there, the size of the greater town of Phoenix, city of Phoenix is our royalty footprint. And that's a 0.83% royalty. That royalty currently is paying over $10 million a year. It's been paying since we bought into. This is one that we purchased. And that one's been doing fantastic for us. And Lundin's pouring money into exploration. They increased their exploration budget last year from 14 to this year, $22 million. And they're drilling tens of kilometers of drill holes. And they continue to advance the resources there, which is fantastic for us, including in-pit discovery from in-pit drilling at depth of higher-grade breccia zones within that copper and molybdenum copper porphyry system in Chile. Another one with multi-decade mine life, not including the potential for substantial new discovery. They've been making some noise about a prospect immediately adjacent to the Caserones mine, well within our footprint at Angelica, talking about how they're going from a small oxide resource there to a sulfide resource at depth. That's very exciting news to us. So those two are kingpin assets within our portfolio. And then from there, there's some nice backup assets, including the Gediktepe oxide gold silver zone, which is our largest paying royalty to date, but has a very short mine life. That transitions to a sulfide zone that's copper zinc at depth. And we're looking forward to them getting that in production. They've raised the money to do so. We're keen on that. You go to the Leeville mine, which ironically is a deposit that I was involved in the discovery of when I worked at Nomi Mining Corporation. And it's great to get monthly checks now from them. And that royalty's paid over $40 million to us since we purchased that royalty or purchased that project generator. That was a project generation company that generated that royalty. We bought that into EMX a number of years ago. That's on the positive side. Now we've completely paid back what we paid for that whole company just from this one royalty. And that one has multi-decade mine life in the future, is currently paying about $5 million a year. And we're just delighted to have Barrick, who is the operator of that joint venture with Newmont called Nevada Gold Mines, on the Leeville deposit. That's in the heart of the Carlin Trend. And I could go on from there. There's a number of discoveries being made within our portfolio, including the Peak discovery being advanced by South 32 in southern Arizona. That's a fantastic example of discovery optionality coming to fruition within the portfolio, Rick. And just delighted to see that. The next producing royalty that will come in is the Viscaria mine in Sweden, and that is copper, gold, and iron. And that's within a historic mining district with excellent infrastructure in northern Sweden in the Kiruna mining district. But this all speaks to this whole concept of mineral property ownership and royalty ownership. We have 160 royalties in 14 different countries, over 200 mineral property positions globally.
And importantly, I think your exploration budget to advance these projects and your construction budget and your sustaining capital budget and your operating budget is zero. Perhaps you could talk about that. Perhaps you could talk about the fact that including operator fees, cash payments, share payments, that your generation cost is often sub-zero. If you could talk about the business model in that regard.
Well, we're distinctly cash flow positive at this point in time, and there's no looking back. With top line revenues, including those various sources, the production royalty payments, pre-production royalty payments, stage gate payments, share payments related to deal flow, et cetera, coming close to $40 million a year right now. And we're in a position, enviable position, where we're buying back stock and we're paying down debt with the strong cash flow that we have today. And it speaks volumes to the whole concept of this business model that I know you believe in deeply. And it has absolutely come to fruition, and we're in a strong position in that regard.
It's interesting that you note share buybacks. Our mutual friend Doug Casey said in his newsletter once, you could subdivide companies if you want into two camps. Those who believe that your money is worth more than their shares. They issue shares and take your money. Then there are companies who believe that Their shares are worth more than the money, and they are using money to buy back shares. It would seem that the latter are preferable to the former. You obviously believe, as a consequence of the fact that you have a normal course issuer bid that's uh, retired, I think, over 1 million shares,
6 million.
that your shares are worth more than the money. Perhaps you could talk to that value proposition.
Yeah, we've purchased now the maximum that they allowed us to buy last year, that the exchange gave us permission to buy back, which was 5 million. They've given us permission to buy another 5 this year. We're already about 1.5 million shares into that. So cumulatively, we purchased back over 6 million shares, constituting almost 6% of the issued and outstanding share capital of the company has been purchased and retired. And that speaks volumes to the fact that we feel that our PNAV, our NAV per share price, is substantially above the current trading price. And one of the best things that we can do with respect to capital allocation is buying back our shares. I cannot buy royalties of the caliber that Timok royalty is, or the Caserones is, or Leeville, at below net asset value. But I can buy back our stock. And we believe that's one of the smartest things we can do today, in addition to paying down debt.
I would note for the listeners that from a tax basis, share buybacks are usually much more efficient tax-wise than dividends, if people are wondering about that capital allocation.
Yes.
Dave, tell me something about where we go from here. Tell me something about your competitive advantage in exploration. Tell me something about your people, the Bronco Creek team, the fact that you operate internationally.
So we've always cast a broad net, Rick, as you know, and that's because we're looking for that prospective mineral right around the world. And a lot of people say, are you gold? Are you copper? We're prospective mineral rights. We want to acquire more prospective mineral rights, and we want to leverage that to the advantage of our shareholders, as we have for 22 years. And this business model absolutely works. And so it's more of the same. We will continue to generate royalties around the world. You'll see some large sales of assets forthcoming here in the next month or so, where we're selling off more projects, keeping royalties as we do so, in addition to very selectively buying royalties. And our strategic advantage here with respect to that is that most of my competitors simply buy royalties. And it's no secret that royalties are phenomenal financial instruments. Therefore, they trade at a premium or a strong price in the secondary market. But given the fact that we have this hedgehog, this our core strength, with strong geological and engineering talent around the world, evaluating and looking at prospective mineral rights for us to acquire as part of our generative work. That same team is also turning over stones and looking for opportunities to buy royalties. And some of the biggest value creative transactions we had in the history of the company have come from that synergy and that fun playground between royalty generation and royalty purchase, which is facilitated through that strong technical talent base around the world. And we firmly believe that astute business decisions are rooted in solid technical understanding. So we lead with the technical understanding and then make the business decisions. And this is the core strength of EMX.
Dave, thank you for 2 decades of toil on behalf of shareholders. In particular, of course, toil on behalf of this shareholder. Thank you, too, for 2 decades of support of the Natural Resources Investment Symposiums. We look forward to hosting you in Boca Raton.
Look forward to seeing you there, Rick.
Tell me one more thing, Dave. To the extent that people are listening to this interview and are interested, and they should be, who do they contact? How do they find out more about EMX?
They can contact me, Rick. And that's Dave at emxroyalty.com, DAVE at emxroyalty.com. Also, Isabel Belger at ibelger, IBELGER at emxroyalty.com. You can also call our phone number, and we look forward to hearing from you at 303-985-8585.
Thank you again, Dave. Remember, folks, the buck stops at the top. You want to hear more about Dave's company? Call Dave.
Please.
Thank you.
Thank you.